So welcome to the Facebook Live of the Inter-American Development Bank. I am Angela Funes. I work at the Office of External Relations, and I'm with Paolo Giordano. Paolo, our sector principal economist of the Trade and Integration area of the IDB. And we're going to have a very interesting conversation about trade. What can Latin America expect regarding trade and integration, Paolo?
Very well. Welcome everybody to this Facebook Live. We're happy to be here.
Thank you for your time. We're very excited because we have a very diverse audience. We have people from Trinidad and Tobago, from all the Caribbean countries. We have people from Brazil, from the US, even from some Latin American countries. So we will have a very interesting conversation. Are you ready?
Yeah.
Okay, before we start, and I know more people are joining the conversation, so please send your comments and questions to our Facebook feed. And also, don't forget to download our publication, The Monitor, to learn more about what's happening on trade and integration in the region. Okay, Paolo. So we are living an age of uncertainties and upheavals. So what can you tell our audience about what can Latin America can expect in this coming year regarding trade?
Well, I think to answer your question, Angela, we have to understand where we're coming from. We're coming from the longest trade recession that Latin America has known for several decades. We have to go back actually to the early 30s to find such a stretch of downfalling exports. This past year, 2016, has been the fourth year in a row in which exports have come down. But the good news is that they started to fall at a lower rate compared to the past. The previous year, they fell 15%. Last year, they just fell about 6%. That's what we estimated at the end of the year. Our revised estimates point to more 4%. So the first good news is that the trend is starting to change. Now, why are exports falling? Demand throughout the world has been growing less rapidly than it did in the past. And this is very much related to the fact that China is growing at a lower rate than it used to do in the past. And so this is a new normal to which Latin America needs to adjust. At the same time, the United States and Europe are recovering very slowly from the Great Recession. The United States a little bit faster than Europe, but that's not enough to make up for the falling demand from China. And at the same time, Latin America has been in the deepest recession that it has known in decades. And this has been a huge impact on the exports of the region. So the first point that I want to make is that certainly we live in an uncertain age, but things are starting to improve on the macroeconomic fundamentals. Growth is resuming. The price of commodities are also resuming after having fallen a lot. So there are good forces that are pushing Latin American trade performance. Obviously, there is a huge political uncertainty on the direction of trade policy in general in the United States and throughout the world, and this will have a huge impact on the perspectives of the region.
Yeah, you touch a very important point, Paolo, the U.S. trade policy. We are in the 30-day, Mr. Donald Trump, President of the United States, it's been 1 month in power. So what can you tell our audience, what they can expect from the U.S. trade policy, and what opportunities can this bring or other risk that the countries can face with this new area that we're living in?
Yeah, the current administration has given, on certain areas, has given some clear signals. On other areas, signals are either not very clear or or there is not much information out there to be able to have a judgment. One thing that is clear is that trade is going to be a very important issue for this administration. To a certain extent, the political campaign of the Republican Party has been run on the premise that the direction of trade policy should change. And we have seen this, for instance, with the fact that the United States pulled out from the TPP, the Trans-Pacific Partnership. So what can we expect from that? I think that Latin America can expect at least in certain cases, the renegotiation of certain trade agreements. That's for sure in the case of NAFTA, and it remains to be seen to whether and to which other to other agreements. This is one thing. The other thing is that I think there is a lot of uncertainty because a lot of the trade impact actually are not going to be determined by the effect of the trade policy, but by the effect of other policies. And for instance, there is a huge discussion right now on the reform of the tax code and particularly of corporate taxation, that the economists are debating whether the proposals on the table will have a trade impact or not. But even if they don't have a trade impact or don't have a trade distortionary impact, they might have an important effect on the determinants of investment abroad. And so that, in general term, will have certainly a big impact on the way Latin America does business with the United States. And so it's certainly something that needs to be followed very carefully.
Of course. And I have a quiz for the audience, because you talked about, where are we coming from? Because we are now tend to think about the present, what's happening right now. But it's very important to know where we're coming from regarding trade. And I want to have a quiz for the audience. The question is, how many of you think that Latin America has increased, decreased, or maintained their export levels in the past 20 years? So you have time to respond, because that's a very important question to put in perspective what we're talking about. But let's go to the Caribbean, because I know we have a big audience watching us in the Caribbean.
So I would like to know what are the preliminary responses to this question, because I'm going to talk about this topic later.
Yes, yeah, that's very important. And I know it's a topic that you like because the monitor touched on it. So, but let's talk about Latin America, and within Latin America, let's talk about the Caribbean, because you mentioned about the fall of exports in last year, 6%, and there is a slowdown in trade globally, but Latin America has been more affected. Tell us about what is happening in the Caribbean regarding trade, and what is the perspectives there?
Yeah. Well, last year, the Caribbean has been hit really hard by this decline of exports. The estimate figure that we had at the end of the year was minus 21%.
Wow.
It might be a little bit less. We're just finishing the final numbers. But the main point is that, yes, the Caribbean has been hit very, very hard. Now, there have also been some positives for the Caribbean, because don't forget, we never have to forget that the Caribbean is a net importer of oil, with the exception of Trinidad and Tobago, obviously. And net food importers. And to the extent that the prices of commodity have come down, this could be positive for the Caribbean. And this is a trend that is expected to continue this year, or at least to those commodities that the Caribbean is importing. Now, nevertheless, the fact that imports have slowed down so much is something that I think the Caribbean should take very seriously. I think that I truly believe that integration within the Caribbean has not been harnessed as a policy for development, and there are huge missing links between the Caribbean and the rest of Latin America. In a way, the Caribbean is, we consider it here at the bank as part of Latin America and the Caribbean region. But in fact, the trade ties are very, very weak with the rest of the region. There is a lot to be traded with Latin America and in the Caribbean, and a lot of opportunities that need to be grasped. And so there is huge avenue for cooperation between Latin America and the Caribbean.
In the Caribbean, okay. So you said the Caribbean was the region, the sub-region within Latin America that was hardest hit in regarding to exports.
Well, at par with South America, which last year, because of the crisis in Brazil, was hit also, and because of the dependency on commodities, was also hit very hard. So both Caribbean and South America were around above 20% contraction.
And
in
who
exports.
did better then? What countries or what areas did better?
Well, then obviously, I mean, when you look at the data in aggregated fashion, you have averages. For instance, in South America, you had countries like Paraguay or Peru that did very well. You have in Barbados, it's a country that within the Caribbean did also quite well, and for which exports grew, particularly tourism. So I'm just giving figures, just aggregating the different sub-regions.
So there are different situations depending on the country.
Yes.
So you mentioned something very important about the fact that the Caribbean is not too much integrated with the rest of the region, right? So I think it's very important to mention the opportunities that Latin America has to do more internal trade or to be part of this global change. Can you talk about that? Because that's a big agenda.
Yes. I think, first of all, if we think about integration in the Caribbean, we shouldn't see integration or regional integration as an end in itself, but rather as a tool to achieve a higher goal. The Caribbean market, granted, is very fragmented, or is still more fragmented than one would wish. But even if it were a completely integrated common market, which is the plan that those countries have, it would still be a small market. And so that common market needs to be seen as a better platform to favor value chains or industrial complementarity or even logistical cooperation, so that countries together can go out and sell onto other external market, be it in the United States, in Europe, or in South America, or the rest of the world for that matter.
Thank you, Paolo. We have a question from Pablo Gutierrez from Chile. He asked, in this new global context, how can Latin America engage better with Asia? And you just mentioned China, and he's like the second trading partner of Latin America, so it's a very relevant question.
Yes, no, it's a crucial question because there are so many dimensions to this question. Obviously, and I would say just a few ideas that are food for thoughts, and certainly not straight and complete answer to this question we would use all the time that we have, and that wouldn't be enough. I think one thing is to think about the fact that Asia has been of paramount importance for the development of Latin America in the last 15 years. But as you can see in this report that we're presenting today, which is the Trade and Integration Monitor 2016, we analyzed, in fact, these past 20 years of trade performance of Latin America. And what you can see is that, for instance, all what has been called the super cycle of commodity prices has basically come to an end. And this was really very much pushed by the demand of China that was industrializing fast. And this has been a huge boon for Latin America. Now, if you look at the terms of trade of Latin America, we're back to where we were in 2003, right at the moment where Asia and China, more particularly, got into the world economy. So I think the first point that I want to make is that China has been hugely important. It still will be very important, but China will not be what it has been for Latin America in the last 15 years. That's, I think, is the first point. The second point is that one of the reasons of why the contribution of China to the development of Latin America is changing is not only because it's changing quantitatively and because China is growing less than it used to do in the last 15 years, but also because it's going to grow in a different fashion. And in these past 15 years, China, just to put it in the most simple way, since we're on Facebook, and I know that there are people that are economists, but probably people that are not economists, China has been building roads, has been electrifying the countryside or electrifying the cities. And so in that case, you demand a lot of copper. You demand a lot of copper because you're because you're electrifying and building, or you demand a lot of steel because you're building skyscrapers. Well, this phase will go on, but probably it's not going to be so intensive in the demand of copper, of iron that is exported by Latin America, or soybean. Probably it's going to be intensive in other goods, to the extent that China is, pardon me, that China is actually growing, and people are growing richer. Probably they're going to start demanding new products. And so maybe China will be an avenue to sell foodstuff, chicken, beef, and other products that Latin America has been selling. So the question is how you are able to read what is going on in China and how you are able to change rapidly to seize these new opportunities. And this brings me to the last point. In the last 15 years, I think Latin America has been looking at these huge opportunities that we had in China, but very often, or more often than needed, countries has gone alone in their strategy towards China. And perhaps now there is an opportunity to really think about the region as a whole region and negotiating together with a giant such China. And that could bring huge amount of benefits, particularly for those countries that are definitely too small to really be able to sit at the table in a fruitful way with China.
That's great. Thank you, Paulo.
Sure.
We have another question coming from the audience. In this case, it's from Marie from Trinidad and Tobago. She'd like to know what did Peru and Paraguay what did they do to improve their export sector?
Well, in certain cases, it was something that was very much determined by the start of one big mine or one big project that was coming to stream. And basically it was the case in both in Peru and in Paraguay in two completely different fields. In Peru, in the mining sector, in Paraguay, in the agricultural sector. But what I think that those two countries also underscore is that, in fact, there are two countries in which economic policy has been very sensible in the last few years. And the fundamentals of those economies were basically right. And so in a moment where the trade downshifting, as we call this report, hit the region, these were countries that were better prepared to try to diversify their exports or to weather the storm that was originating in the external markets. As an opposition, I won't mention the countries because there's no point. There were countries that didn't have the house in order, and when the crisis hit the region, well, the effects were harsher just because the fundamentals were not in place. Now, this doesn't mean that when the crisis hit hard, that it was that only bad policies were the culprit. There were countries, I'll give one example, for instance, Colombia, which has the house very much in order, but its specialization was really concentrated in countries that really took a hard hit. For instance, oil, for instance, other products whose prices have really gone down a lot during the past year. And so this was really difficult for the region.
Yeah, you talked about putting the house in order, Paolo, and you talked about also export diversification. So we know that Peru and Paraguay did a good job. So what can you tell to other countries that are really trying to diversify? What is the recipe for success? So especially in this political context.
Well, the recipe for success, I think, is not to believe that there is a recipe for success.
Okay, that's a very good point.
I think that, no, but this is the question, is that really what makes the export competitiveness of one country is really deeply rooted in the microeconomics of each country. So a few years ago in the bank, we did a major study or a major research on the determinants of successful production development policies, which is another name for industrial policies. And really what we put to the attention of policymakers is that really devil is in the details. And so in order to be able to understand where are your opportunities, you really need to have a lot of information. You need to have a lot of information on what is your export potential, what is the potential demand of dynamic sectors in the global economy, how that demand might shift in a few years, which is compounded, but something we started discussing at the beginning of this Facebook Live, which is compounded by the uncertainty that we have right now on the global economy and on its direction. So I would say that the first point is really to be able to have very deep and sharp trade intelligence that allows you to focus on your opportunities. The other ingredient that you really need to have is a government machine that is able to react very quickly, very efficiently at the tune of the private sector. At the end of the day, it's not governments that trade, it's the private sector that trades. And so in order to, for governments to provide sensible help to the private sector, governments to a certain extent need to think not like the private sector, because governments needs to think like governments and it has a different function, but it needs to think at the speed of the private sector. And third, you need to have a private sector that is willing to gamble and take risk and really do the entrepreneurial job and try to look for those opportunities and risk their bottom line for pursuing it.
So those are great ingredients of the recipe, although we're not talking about recipes, I know.
Yes, but I didn't give quantities and I didn't give processes.
Yeah.
But I would give an additional ingredient. I think there are certain uncertainties, there are a lot of unknowns in the current macroeconomic environment, in the current direction of policy at the global level, but there are a lot of things that are known. And there is one thing that is known in Latin America, is that today the payoff of regional integration, of greater cooperation, of looking within the region itself is something that is going to pay off more than it used to do in the past. Pardon me. And Latin America is very, very known in the world for talking the talk of integration, but not walking the walk of integration. And I think that right now there is a huge opportunity with Mexico, for instance, looking better within the region, with the Mercosur and the Pacific Alliance talking to each other for devising ways to which a better integrated Latin America can see the day anytime soon. I very much hope that that is the yeast that at some point will make grow whatever Latin America will be able to bake.
We're talking about food, and the time is getting close to our end, but I think you just responded to Laura Heredia questions about how can Mexico engage better to its partners in the region. I think you just speak to it. I don't know if you want to add anything about Mexico working closer with Mercosur, La Alianza del Pacífico, and all other partners?
Yes, I think that this is a huge question, and this, I don't know, actually, I'll tie back to something that we're discussing. I don't know what the people has said, or whether Latin America gained, maintained stable, or lost market shares in the past 20 years. Very often I ask this question, and I will check the comments after the Facebook Live. My sense is that people think that Latin America has gained market shares in the last 20 years. And in fact, that's not true. If you look at market shares of Latin America in the past 20 years, and this is studied in very careful detail in the report, you will see that Latin American market share stayed almost flat between 95 and 2015. Now, if you look at Mexico, Mexico did increase its market share. And this came on the heels of NAFTA, through which Mexico was really able to boost its export performance and also, to a certain extent, diversify its economy into some manufacturers that were sold to the US. Now, this means that the rest of Latin America, in fact, lost market share. And this allows me to conclude on two messages. The first, for South America, is that really the super cycle of commodities has been a boom for the region, but that was not enough. We have not done enough. Even with the super boom of the commodities, Latin America lost market share. So that means that Latin America or South America, better said, has not done enough to capitalize on markets that were expanding and to gain competitiveness compared to other competitors. While Mexico, that actually did a good job, did that in a very particular framework, which was North American integration. True, Mexico also diversified, is the country that has more trade agreements than any other in Latin America, for sure, perhaps even in the world. But now the question is how you have those trade agreements, and those are opportunities. Now is how you seize those opportunities. And so how you export different things to Europe, how you have a different trade relationship with Asia, but particularly how you have a new trade relationship with the rest of Latin America. And we know that to a certain extent there are some sectors that are skeptical about the possibility of having deeper trade ties with Latin America, just because in Latin America there is Brazil, which is such a huge country, and that is sometimes perceived as a threat. In Mexico, I think that it's important that with the facilitation of government, the private sector of Mexico sees more opportunities in Latin America rather than threats, and that when there are threats, there are solutions that actually allow really Latin America to be a reality beyond what we say in words. We're very, particularly here at the Inter-American Development Bank, we're very used to think about Latin America as a whole region, and Latin America and the Caribbean, but sometimes actually the region is more fragmented than it is in our rhetoric. And I truly believe that right now, 2017 and the years to come are really years of greatest opportunity for deeper deals between Latin America and its own counterparts. And so I very much hope that the region will be able to grasp those opportunities that we have ahead.
Thank you, Paulo. We're almost coming to an end to our conversation, but we'll keep talking to our Facebook. Those that will watch us later, you can still post your questions on the feed, and we will do our best to respond. We also have a MOOC coming up next week in March. But Paulo, just to have a final message for our audience, talk to those people that are very worry about globalizations, or those people that don't think that the benefits of trade really trickle down, because that's, I think, that's one of the main concerns about this shift in the perception of globalization that we're facing these days. So what would be your final message for those that don't believe in trade, or don't think that really the benefits reach everybody?
No, I agree. This is, I think this is the key question of our times. And perhaps policymakers have come to grasp and to deal with it too late. We all know that trade is actually about expanding the pie, and there's no question about it. And it's very clear. You can look at the historical experience of those countries that actually has shut their doors to trade, and you can see how this has impoverished everybody. So the question, there's no doubt about the fact that trade can create opportunities, but then that doesn't mean that the opportunities that might be created to trade are actually created, and that those opportunities are shared equally. And so I think these are the two main avenues for policy intervention. First of all is really how you negotiate trade agreements, or how you design complementary policies that really make sure that when you open up to trade, or when you trade more, you actually create opportunities and not only open the way to exposing your vulnerabilities. That's, I think, is one key ingredient. And second, which is something that has not had a good response, no matter where you look at it, either in Europe or in the US, where you have the dedicated program dedicated to it, or in Latin America, where this question didn't even make it to seriously onto the policy agenda, is how you compensate losers from globalization, to put it in the easier way. And now, when you talk about losers from globalization, this doesn't mean that losers might be permanent losers. There might be people that could start doing different things. And you have in Latin America, and here at the bank, we have many stories of communities that used to work or used to live on products that were actually not viable in an open economy, and that with education, with assistance, with industrial policies, with even with corporate social responsibility, sometimes from companies, were able to reinvent themselves. So I would say that I'm very well aware. I've done a lot of work on trade and poverty and the impacts on globalization, on winners and losers. I very much think that one should think about where are the opportunities and what are the complementary policies that needs to be implemented to grasp those opportunities, and about the timing to do transition reforms so that potential opportunities are grasped and threats are actually minimized.
Thank you, Paulo. It's a fascinating conversation, and I think we can go on for longer. That's why I invite you to visit our blog, Beyond Borders. The link is on the feed, because we have this type of content in our blog post, and also we invite you to download our publication. So, Paulo, I thank you very much for your time again, and we will see you very soon.
Thank you. It's always a pleasure talking to you, Angela, and it's a pleasure talking to all of you guys on Facebook. I think this is a great instrument. We really look forward to receiving your feedbacks, even if it's very critical, even if it's constructive or not. It doesn't matter. We will be chatting with you, and we hope to keep this conversation alive. Thank you very much.
Thank you. So see you next time.